It is now 10:33 a.m., 8/11 of 2011. I have a Dow Jones chart right here. U.S. indices are putting in their bear market bottoms, or bear market trend bottoms, and it's a 1, 2, 3, 4 day. This is how bear market trends put in bottoms at extremely oversold tops that we've gone down to. And you got downside volatility, downside volatility equal here, and the upside volatility from yesterday's downside. This is called a cumulative. We're short-term oversold on the Dow Jones. Now, when I move the Dow Jones over here out of the way, up here we have what we call the NASDAQ comp. It too has a 1, 2, 3, 4 day pattern. You can see though that the tech and heavy internet type stocks, these are how you get oversold in cycles. It's very clear the amount of drop that we have and how markets are bottom up accumulation, and how far down we have sold off on the NASDAQ comp. We are putting in a bottom. This is the bottoming processes that happen, MMTs, so let it be known. The S&P 500, which I will show next, relative to the, here's the S&P 500 bottom. This is the S&P, and this is the Dow, and this is everything that we say about how to trade bottoms, bear trend bottoms, how to get entries at bear trend bottoms, understand how markets put bottoms in. Sure, we can tell you how they go down because we shorted it all the way down. But then there comes a time where the bottom does get put in, and there are a degree of data sets and tools and things that need to be used. But here is the bottom effect. This is the S&P 500 bottom. There it is. This chart right here, Dow Jones Industrial bottom. Volatility increases at bottoms. The volatility down and then the volatility upside is how they put in bottoms and bear trend bottoms. We are putting in a bottom, and we're putting a bottom in the dog days of August in the short term with all the contagion. Here is your NASDAQ bottom effect. Again, all three of these major components are putting in what we call bear market or bear trend bottoms, whatever you may want to call it. But look at the down day, look at that up day, then look at the down day and look at the up day. So the NASDAQ comp right here is acting better than the other two, as I've already showed. That is the update. The thing of it is, we're putting a bottom in, and a tradable bottom is where you buy the bottom and they accumulate it up, bam. Selling didn't take out the last lows. This low is higher than that last low on the NASDAQ comp. And know that stocks are oversold, and how to take these trades as they are. We are oversold. We are oversold. All indexes are putting in what we call bear reversal bottoms to these price levels, and how to trade the upside every day at the market bottom.